I will now introduce you all to the financial statement audit, which is the most common assurance engagement service. So auditing has been defined in different ways by different sources, but to provide an effective means of introducing and initially exploring the topic, we have the definition provided by the AAA or the American Accounting Association. So auditing is a systematic process by which a competent, independent person objectively obtains and evaluates evidence regarding assertions about economic actions and events to ascertain the degree of correspondence between those assertions and establish criteria and communicating the results to interested users. To distinguish auditing from accounting, so going back to your basic accounting, you have learned that accounting is the process of recording, classifying, and summarizing economic events in a logical manner for the purpose of providing financial information for decision making. So financial reports or statements are the end products of the accounting. So to lend credibility to these financial statements, an audit is performed. So bale, ang audit commences after accounting. So let us discuss the responsibility for accounting and responsibility for auditing. So according to the Philippine Standards on Auditing, it is the responsibility of the auditor to form and express opinion on the financial statements. However, it is stated further that management and those charged with governance are responsible for the presentation and the preparation of the financial statements. So, I just want to emphasize na yung responsibility for the preparation and presentation of the financial statement rests with the management of the entity or those charged with governance. So, what is the objective of auditing? According to the Philippine Standards on Auditing, framework of the Philippine Standards in Auditing, the objective of an audit of financial statements is to enable the auditor to express an opinion whether the financial statements are prepared in all material respects in accordance with identified financial reporting framework. So analyzing this definition, it is to be noted that an audit is just intended to lend credibility to the financial statements being audited. It does not provide any assurance as to the future viability of the entity nor the efficiency or effectiveness with which management has conducted the affairs of the entity. So PSA uses the phrase in all material respects because the auditor's job is only to lend credibility to the financial statements being audited through the expression of an opinion on his audit report. The financial statements are not the responsibility of the auditor. Rather, it is the primary responsibility of the management and those charged with governance. As such, the auditor is not expected to know everything about the accuracy of the financial statements. He is not required to vouch as to their correctness, but only give opinion as regards to their fairness. So for purposes of PSAs, when we say management, this refers to person or persons with executive responsibility for the conduct of the entity's operations, while those charged with governance refers to persons or organizations with responsibility for overseeing the strategic direction of the entity and obligations related to the accountability of the entity. So for financial statement naman, for this purpose, so we refer to the financial statement as the structured representation of the financial information, which ordinarily includes accompanying notes derived from accounting records and intended to communicate an entity's economic resources or obligations at a point in time or the changes therein for a period of time in accordance with the financial reporting framework. So ano ba yung scope ng audit? The scope of the audit refers to the audit procedures deemed necessary in the circumstances to achieve the objective of the audit. So this refers to all the procedures to be conducted that is deemed necessary or identified to be necessary to be able to achieve the objective of the audit. So the procedures required to conduct an audit in accordance with the PSAs should be determined by the auditor having regard to the requirement of the PSAs, relevant professional bodies, legislation, regulations, and where appropriate, the terms of the audit engagement and reporting requirement. So let us proceed to the some of the general principles of an audit. According to the PSA, the auditor should comply with ethical requirements of the Code of Conduct or the Code of Professional Ethics for Certified Public Accountants, which were identified in the Chapter 5 of our reference book. So, conduct an audit in accordance with the Philippine Standards on Auditing and should plan and perform audit with professional skepticism. So, focus na lang tayo dito sa tinatawag natin na professional skepticism. So, this means that the auditor neither assumes that management is dishonest nor assume that unquestioned honesty. It requires an ongoing questioning of whether the information and audit evidence obtained suggests that a material misstatement due to fraud may exist. Ibig sabihin, all throughout the conduct of the audit, auditors should maintain a questioning mind and makes critical assessment. Hindi lang basta-basta na i-accept as tama lahat ng evidence na magagather. Kung babalikan natin yung need for an audit, so basically, there arises a need for audit because of the information risk. So as business become more complex, there is an increased likelihood that unreliable information will be provided to decision makers. And ito ulit yung tinatawag natin na information risk. So independent CPAs are needed to audit an entity's financial statement because of the following contributory reasons. There may be a conflict of interest between the management and the users of the financial statement. So since the information provided by the management whose goals are inconsistent with those decision makers, the information may be biased in favor of the provider. So management may sometimes benefit by giving misleading information to owners, creditors, and other users. And contributing to this problem or factor is the remoteness of the information users from information providers. So it is sometimes impractical for users to verify the quality of information personally because they are usually separated from such records and documents by distance. Thus, independent auditors are hired to audit this information and issue a report thereon for the users to look upon. Also, because of voluminous data and complexity of the exchange of transactions, there had been an increased likelihood that improperly recorded information will be included in the records. So exchange transactions between organizations have become more complex, hence more difficult to record properly. And lastly, information can have significant effect to decision maker. Financial statements are used in making economic decisions. So therefore, unreliable financial statements may have a significant undesirable effect on the decision to be made. So these are the consequences. So given that we have the following contributing factors to this information risk that are available to the users of information, so what are the available approaches for the entity or for the users to reduce this information risk? So to reduce the information risk, approaches that may be followed are the following. First, the users of the information should be allowed or should be allowed to verify the information. Second, users shares information risk with the management. And last approach is to have the financial statements audited. So, the very reason bakit tayo nag-audit or why there is an engagement for audit is for the reduction of risk. Okay? And this is the very reason why independent financial auditing is necessary. So let us proceed to the overview of the audit formulation process. Kasi at the end of the audit, di ba, yung end result kasi ng audit natin is the conclusion or the opinion of the auditor as to the reliability of the financial statements of the entity. So let us have an overview of the audit opinion formulation process. So yung ating formulation process ng opinion is divided into 3 phases. Phase 1, Phase 2, and Phase 3. So let us have an overview of these 3 phases. So in Phase 1, or the risk assessment, the auditor perform risk assessment including client acceptance and continuance decision. As mentioned in the previous discussion file, we follow the risk-based approach in the conduct of audit. So the audit will start with the risk assessment wherein all risk, be it inherent, control, or audit risk related to the audit or the subject of the audit will be assessed to identify the focus of audit. So this will include client acceptance and continuous decision. Siyempre, as a professional, auditors, as much as possible, would not want to be associated with clients with questionable reputations, as this will affect the image of the profession. So for the Phase 2, or the risk response, so after the assessment of risk, the auditor will now respond to this risk or to this identified risk. So how do they respond to this identified risk? It is through obtaining evidence about internal control, operating effectiveness, and obtaining substantive evidence about accounts, disclosures, and assertions. Lastly, sa Phase 3 or the reporting phase, the auditor will complete the audit and make a decision about what type of audit report to issue. So yan yung overview pa lang ng ating formulation process of the audit opinion. This will be discussed naman in detail in the succeeding chapters natin. So let us proceed to the management assertions. So as discussed in the previous file, the financial statement assertions are the management's expressed or implied claims about information reflected in the financial statements. So we have the following assertions about classes of transactions and events and related disclosures for the period or the income statement assertions. We have occurrence, completeness, authorization, accuracy, cut-off, classification, preparation. So you may refer doon sa ating reference book for the following, kung ano ba yung assertion ng management as to the following. So again, these are the assertions related to income statement accounts. We have, on the other hand, the following assertions related to the account balances and related disclosures of the accounts in the statement of financial position. We have existence, right and obligations, completeness, accuracy, valuation and allocation, classification, and presentations. So these are the different assertions being made by the management. So once the auditor has finished auditing the important assertions relating to each account included in the company's financial statement, the findings are reported to the company's shareholders and to the investing public. So to end, we have here an overview of the audit of financial statement or the process of the financial statement auditing. So as you can see in the figure, Management is responsible for all the boxes under it. It is responsible for the implementation of internal controls, for the conduct of transactions, up to the issuance of the financial statements. So once an entity engages a service of an auditor, or once it engages an audit of a financial statement, the engagement will start through an engagement letter wherein the terms and references related to the engagement is agreed upon by the two parties, which are the responsible entity or the management and the practitioner or the auditor. The conduct of the audit will involve gathering of evidence to measure and evaluate management assertions against suitable criteria. So after wrapping up all the procedures or all the audit procedures, the auditor will then determine the overall fairness of the financial statements, and the related conclusion will be in the form of an opinion provided in the audit report.